Forex Signals, the world's most profitable Forex resource.
No. I always think that little song would be great at the beginning of like a Prometheus type movie, right? Some epic shit is about to go down. I wonder if it's actually been used in a movie. It's definitely been used in a trailer for sure. But, I mean, the music does not fit the market. We were perhaps on the verge of a big move here in the pound. We had some building up, some short squeeze, announcement of a deal in progress between the UK and New Zealand. Got the bears covering shorts into the CPI numbers. CPI numbers came in a little hot, but nothing to get the market to push, a little bit higher. If we got a little bit higher, then the stops can start to roll themselves up, and you can get a quick move in the next 24 hours, say to 125, where we can look for some more significant real selling. Between 125 and 126 is a lot of interest to sell. Okay, a lot of banks got sell orders up there. A lot of traders have given their opinion that they want to sell it though. Now, that doesn't mean we can't go to 127 or something crazy. Any sort of short squeeze will do that, but it seems like the market hasn't got the appetite for it at the moment. Now, the long-awaited short squeeze will happen at some point. Just it's part of the way the market works. You can't have 20 days down without the potential for the short squeeze. And whether it's today or next week, it's coming, right? It's just and we've got to try and be patient there. It doesn't mean that we want to buy, but it's not the worst time to buy in the last couple of months, right? It's just you need a catalyst, and the catalyst wasn't given today. The CPI numbers were a little strong, but just a little flat. So look, moving forward, then we have to go to some other, what's moving else in the market. Pound's a little bit on the sidelines. We had some movement in the commodity pairs on inflation data itself. So it's an inflation data day. We had the New Zealand data come in stronger than expected. Market pushed higher and has sustained this rally. The market was already on a rally. There is some chance now that RBNZ does not cut on November the 10th. And it's still the highest yielding currency out there, and stocks are strong, and the US dollar's given us a window to rally against it. So if you got stops above 72, you're probably going to get taken here. I don't have much interest at all to sell the Kiwi right here. Same way I don't have much interest to sell the Aussie. In fact, I'm buying the Aussie after RBA low came out this morning. It was very neutral. I mean, he's the new governor in Australia, and we've got an inflation fighting bank as well. But usually he talks down the currency. Today he's like, well, the currency is where it's at because of recent rallies in commodity prices, and it seems about appropriate, the price. That's not the stuff you say if you want currency to fall. That's the stuff you say if you want the currency to rally. So, the Aussie bulls don't need a reason to buy, right? They just come and buy no matter what, right? That's the default direction is up. You need the US dollar strength, and you need the potential for some China problem or something to get the market selling the Aussie. Now, do we have anything like that coming up? Yeah, we've got Chinese GDP tomorrow, and that could be a catalyst for a pullback here in the Aussie. But by no means do you want to front run that. That's not how you trade this current market. Risk is on, and Aussie and the Kiwi are leading. CAD is also playing its own part, but I don't have a grip on oil, so I don't have a grip on CAD. But yeah, CAD's also having its sharp little move to the downside. In fact, it's sharper than the Aussie, but I'm more happy playing the Aussie and the Kiwi long at the moment. Actually, I'm not happy playing the Kiwi long, but I'm happy playing the Aussie. How's that playing through on the Aussie Kiwi? So just a little look on the Aussie trade that we are in. Where can you put take profit? I mean, look, let's just put a take profit on a break of 77. Take some stops. Okay, that'll do. We might be able to take that tonight before the Chinese data tomorrow. Now, how's that playing out with the Aussie Kiwi? I mean, the Kiwi's pushing back, right? So the Kiwi's, forcing the Aussie Kiwi back down. Now, I like to buy underneath 106, but I have nightmares about what happened last time we bought the Aussie Kiwi, so I'm a little hesitant to get involved here after that 107.80 level held. I think range trading is going to be the default in this pair, but I want to see a much better level before I get tempted. So maybe 105.50, 105, and some sort of reason for the Kiwi to be weak again, then we can get involved in that. Kiwi has a way of, when it's rallying, overextending, and you don't want to get involved against it. And if anything, the channel's still holding. I don't know whatever draw this. It's not the best thing to draw it with. Anyway, you can see the channel anyway. I don't have to draw that. Where's the Kiwi? Where is the Kiwi? On the daily. Oh, geez. Some whacked out lines as well. Yeah, so the short-term bottoms have been put in place here on the Aussie and the Kiwi, and so we're looking for resistance, and that can turn into a big rally, right? It doesn't have to stop. If you've traded this pair before, it's very dangerous to sell even after it's gone 200 or 300 pips, because it can hold and then just grind higher. And so there's no reason to get involved in the short side at the moment. The short trade is done. Okay, just short term anyway that I see it. Unless the CPI number comes in really hot from the US tonight, Yellen's basically short stepped that rally. US dollar strength will come back at some point, but let's be patient. Yeah, it's the market's not seemingly in the mood, and you can tell that by the way stocks are reacting. So we're sitting in a market which risk on, commodity pairs rallying, and we've got a big risk event in the ECB coming up. That leads us towards selling the euro, definitely selling the euro in rallies, but selling the euro against the Aussie, selling the euro against the Kiwi makes sense to me. Dollar yen has been sidelined by its failure and the US dollar weakness, so no reason to keep buying on dips just yet. We might get a flush out a little bit lower, and that would give us better risk reward on this particular pair. Same as we want to sell the euro towards 110.80, 111 as a way of expressing US dollar strength going forward. I want to be buying the dollar yen towards 103. If I can get that, I'll be quite happy, as long as there's not a major problem out there. Any sort of euro weakness on the ECB would probably be best expressed via the pound, short term anyway, especially if the pound continues to stabilize and even starts to grind higher. Say we're looking at 123 tomorrow, and we're going into the ECB announcement with the euro a little bit higher and the pound a little bit higher. Then there's a lot of ways in which the euro pound will actually continue to fall and to take profit. And the euro pound has significant room to move if it does want to roll over. So this little support zone here around 80, 89, 70, 60 could easily give way in the next couple of days, given the risk events. And that could be a source of the pound strength as well. And, like I said, we're looking for that pound recovery trade. I don't really want to buy pound straight, but I could be tempted to sell euro pound. If the ECB extends, of course, I'll be selling the euro pound. Now, if the ECB extends this month or gives clear indication that that's the direction they're heading in, the dollar yen should do well. But euro yen might cap it. Euro yen is, one of the traders asked me in the room, what about euro yen? It was looking like a monster last week. And now it's looking a little bit more toothless. It's got some downside risk. Generally, you want to be buying on dips, but probably try and get a little bit lower. The dollar yen rally should outpace the euro sell-off if that is to continue. Sub 110, euro and dollar yen say above 105. The pace of the downside in the euro, unless there's some specific, if it's just ECB news from QE and the US rate hike approaching, then euro yen's probably going to do okay. But right now the market's not focused on that. So enjoy the Kiwi rally while you have it. Enjoy the Aussie rally while you have it. The other big mover in the markets has been some emerging markets movement. You're getting a lot of ZAR buying. Seems to be some peace made between. There was a bit political issues there with the new financial minister. And also Trump seems to be imploding, so this is really helping the Mexican trade that we've been in now for a little while. Sharply move lower. This is a few percent move, even though it doesn't look like that much. It's actually a few percent move. So this is great stuff, and hopefully we can bag a big one here. God damn it, we need it. Last month was terrible. So yeah, selling dollar Mexican is one of my favorite trades at the moment. If you're not in, be a little careful at these levels, but any retracement just back up to say 1890 should cap, unless Hillary does something crazy. I don't see Trump recovering from this. Could be wrong, but yeah, we'll see. And I expect most of the markets move into November elections to be front run if it looks inevitable. Let me read the chat. Yeah, no, look, there's no police sirens. It's just there's a fire station next door. Stop trolling, magician, demon. Don't be crazy, man. Yeah, the trade visit. Yeah, look, dollar Mexican has got a lot of downside potential. It's just you got to be careful in your entry. It does have retracements. It's a little bit linked to oil. There was an article posted a little bit earlier today about the Mexican. I'll have a look at that in the data wrap. But it goes into the fair value of it. It's should be closer to 17, which is near I take profit. So, I mean, the market's probably going to overextend, right? Come back in a year's time at 16 or something, but we don't. We're there just for the short-term gains. It's not like I like trading these exotic pairs too much. All right. So US data latest tonight. Settle down there, Mike. US data later tonight is relatively important, not extremely important. ECB member President Draghi speaking is important. Bupa, President Weidman's talking. They must be talking. Okay, they're probably not going to say anything. It's just welcoming remarks. So that was last night. That was welcoming remarks. And so US CPI. So the other big thing is the global dairy auction. So that's from the Kiwi perspective. That can take the wind out of the Kiwi, and that's important for the Aussie Kiwi potential. Now there has been 4 or 5 weeks of 4 or 5 auctions of weakness, but before that there was huge gains, right? So you want to see a bounce back here if you're long Kiwi, and if you're short Kiwi, or you're looking to get say long of the Aussie Kiwi, another disappointing number here could lead to the outperformance. Doesn't mean it's going to stop the Kiwi rally because it's not that sort of data, but it could lead to some outperformance here on the Aussie versus the Kiwi. So it's important to be watching there. That comes out around about 1:30. It's tentative because it's an auction that comes out when it's finished, but yeah. US CPI data is not as big as say the Kiwi because it is monthly data. Aussie CPI numbers are next week for those who are keeping a track of its for the Aussie Kiwi trade. So Chinese GDP rarely comes in other than it as expected, maybe slightly better. So expect a 6.7, 6.8 tomorrow. It would be surprising to have a weak number. They like to keep things very steady and very predictable over there, at least in the last couple of years. Okay, so that's where the market's sitting right now. Keep a close eye on the pound if you're short. I mean, you must be short. It's something you can't. The short trades anyway are no longer just a free trade, right? You got to be watching carefully. He'll come back and it could be making a move, right, and then it won't stop. So. Yeah, I don't know about Synergy FX. See, there's some little debate going on there. Maybe one of the traders blew up, but I mean that happens all the time, right? You want big gains. It's just not the sort of market where you're not going to have people blowing up. All right, futures are indicating a 7% rise. That would be interesting. 7% would be pretty strong for the Kiwi. Definitely take it above 72. I said there was a something were posted about the Mexican. Let's see if I can find that. See if it's still up there. If you want me to look at a particular pair, just PM me, guys. I think I covered the euro yen enough there. Buying dips, but just be careful. Buying into the dip after the ECB delivers. Yeah, that'll be fine. So what they did is made a little model between some emerging market currencies, stocks, oil, and took out what would happen, the effect of the election risk. And you can see here that it's really overshot to the top side as Trump was making gains. Now, as he's imploded, markets pull back sharply, but we can easily pull back down towards that 17 level. So there is a lot of movement there in terms of what's happening. There is some risk there, obviously, that polls are not representative of the average voter because there's some bias towards people who would vote for Trump not admitting it. So they're, same as the Brexit vote, you could have some polls that are just misleading, but it would have to be huge misleading. It would have to be it would be the upset of the century, right? I mean, she's not a great candidate, but I don't know. He's not settling down. He's going more bluster. That's just not how you win an election, I don't think. Obviously the voters are pissed off in America, but they're not that pissed off, right? If you toned it down maybe 50%, it could be a real run. So yeah, I mean it's got a lot of potential, that trade still. So keep on selling rallies if you believe the narrative there. I didn't check this chart. This is Sean Lee. He posted this earlier in the day, so yeah, it's busting up to 80. 80 is a big level historically on the Aussie Kiwi. Sorry, the Aussie Yen. I used to trade this a lot, this pair. I'm a natural buyer, but you can see that the definitely the bulls are in control in the short term anyway. Target that 85, 83 level. Next little band up. I might buy some of that if there's a nice pullback in the dollar yen. And we haven't looked at this since the euro broke down, so let's have a little look at the support there in the euro. So euro broke out of its little wedge, right? Now this is not the main reason I'm bearish. I believe the US dollar strength story, the yield story. So you got to keep an eye on the US yields, but ECB's still got a little bit more, 12 months worth of easing. This is great for Viper, this whole story, right? This is really, potential here to break out. If the Fed keeps on being a little bit non-committal, though, then you're going to see the US dollar bears come back for sure. We need some Fed speakers to come out in the next 2 weeks, really lay it down, or a strong October NFP number. Yeah, I think the bank traders were talking about it. I'm not sure exactly what they were inferring because I wasn't really reading the chat, but something along the lines of 590 yards open interest. 590 billion short open. Okay, on the pound. That is a lot, guys. That's a lot. Yeah, that's over $500 billion. I think that's what they were referring to. Let me read it again. I saw something like that. I was like, what is that? That's nuts. Well, they might be talking about something else. I'll have a little chat to RS if I see him in here. So yeah, so back at the euro. Sorry, obviously the previous low is coming into view, but below that there's not much. Yeah, so it could get pretty slippery on the way down to 105, 106 again. The same way dollar yen will get slippery above, or punchy above 105. Okay, what are they saying here? Remaining bearish. Okay. 124.57. Alright, they're selling pretty early at 123. That seems a little early to me. 123.70. If the market's going to short squeeze, probably the reason's going to be enough for it to go more than that. It might be a 24-hour rally, 3-session rally. That to me seems 200 to 300 pips. So if you're short on the euro dollar, you have to be long on the dollar Swiss, targeting a break of parity at some point shortly. Now I closed out my dollar Swiss on Yellen, but I don't mind re-engaging some of that. I just want to see if we do get a pullback here, because say the euro gets a little rally into the ECB. There is some risk there, but the same way I want to buy dollar yen at 103, I want to buy dollar Swiss at 98, and I want to sell the euro towards 111. Aussie dollar's going back towards its descending trend line here. That everyone sees that same line, right? We talk about this with clients all the day. If we break it, doesn't mean we're going to kick higher. I mean, it helps, but it's not really the sort of environment where the Aussie's going to go ballistic against the US dollar without some sort of collapse in the US dollar. US dollar is quite strong too. It's just, right now it's getting lifted from the risk on appetite. That is hard to sustain. So yeah, I'll probably be looking to sell towards 77.50, not keep on buying on break. But we'll see how it plays out. I mean, selling tactically, not really, because same reason I'll be selling the Kiwi towards 73. Dollar CAD's a little bit more interesting. It's got a lot more room to move in its trend channel, but yeah, it's been surprisingly weak, right? It could have easily been down here on the move above 50 in oil. So it's not I don't have a good grip on this pair at the moment. And euro yen, yeah, they're talking about buying dips, but it's anytime you want to buy the euro yen, it's safe to buy the dollar yen in the current market. Euro pound, this is much more interesting for me. Staying bullish for a break above the 91.40. Okay. Testing that 94 high. Yeah, I mean, that would be the same as the pound getting to 118. Could happen. So definitely if you're buying the pound, you've got to use stops, right? You've got to use stops. Alright guys, so that might do today. Yeah, be careful of your data, the hedge. I haven't looked at that on my FX book CRT report before. And what they were talking about is interest in options as well, right? And we're talking about net positions. That's important. So the net positions in their non-commercial positions are quite large there, the difference. It's around 90,000 short, 95,000 short pound. And the leverage funds are just crazy short. So yeah, I mean, if you look closer, I think it's much more short pound than there is euro. I mean, the way I look at it is through the I'll look at it next Monday for you guys. But there's a report from Deutsche Bank that I read, and it does it in a more graphical format, and you can see that it's just the pound had a bit of a clean out on that move back towards 134, and then they just re-engaged ultra heavily. So they got cleaned out a little bit, but then they've re-engaged in the last couple of weeks pretty sharply. There might have been some lightening up as the market hit a lot of take profits, but yeah, I still think heavily short. But we'll look at that next Monday, okay? Just remind me and I'll bring it up. The currency most interesting to me, the delta, is probably the pound if it can manage an extension here. It'll be disappointing if it just rolls over again. Just mainly I want it to rally so I can get a sell in it. But also the Aussie's geared up to try and attempt to break 77. So that's worth watching as well. Stocks are on the move higher. Euros seems a little bit meh again. So yeah, I'd be just watching the Aussie, the Kiwi, and the pound against the US. I haven't looked at the Euro Aussie short for a while. Oh golly gosh, we're breaking. Okay. I didn't draw this earlier. I drew this months ago. Yeah, no, it's not a bad little short. Let's see what happens at the ECB, right? We can make some plans here, but there's a lot of room to move here in the next year. It's a longer term move. Let's get past China GDP and the ECB though. That could be a trade for next week. All right, guys. Good luck with your trades. I'll be back tomorrow at 9 GMT. We'll talk about the China GDP. Also, we'll talk about the US data, and we'll have a little more in-depth look at see if what's happened there with the pound. ECB night, we're probably going to do that live. So I'll get up just after midnight, or just before midnight, and do that live here in Australia. But apart from that, just trade safe and be wary of selling the Kiwi. Yeah, footsie's strong to finish.